All right, so the recording has started. So I'm gonna record it after the live. I'm gonna drop it so you guys can also use it to practice after the live. Now, it's advisable everything I'm about to teach you now is either you write it down, right? Or you drop it in your notepad, your phone notepad, you write it down so you can always come back and check it out, right? I'm gonna teach you all the entries you're gonna need, the confirmation you're gonna need to take this very trade, right? Now, it's a simple price action strategy. I'm going to teach you different entry models. Now, the first price action strategy or the first price action strategy, which you all know, right, is the support and resistance. Support and resistance is also a price action strategy, but I'm going to teach it in an advanced way, right? Then trend line. Trend line is a price action strategy, right? The moving average. Moving average is a price action strategy. Your RSI, your MACD, those indicators, those are price actions, right? Now, in this live now, here's what I'm going to teach you. I'm going to teach you the support and resistance, the supply and demand, the trend line, how to trade a trend line, then stop loss hunts, right? And also some advanced aspect of liquidity, right? So now, let's begin, right? So we are going to begin now with the support and resistance or the supply and demand. Now, support and resistance can also be regarded as supply and demand, right? But as an advanced trader, right, as an experienced trader, support and resistance are not always called supply and demand, right? So let's mark out a support level. Now, what most traders do, right? What most traders do to mark out their support level, their support and resistance. If I say resistance, I mean a, a, a point at the top of the price, right? So let me just briefly use this to explain. If I mean resistance, I mean the top, right? Where the price has gotten to and pull back down. It's like a ceiling level, a ceiling. While a support level is like the ground level, right? Like the bottom of the price, the ground level, which the price will tap into. The price will tap into the level and pull up. That's a support level, while the resistance is always at the top. Now, what most traders do is this. To draw support and resistance, most traders they go over to a daily time frame, right? Some draw their support and resistance on a daily time frame, some draw it on a weekly time frame. Now, if you are going to draw your support and resistance, I'm going to teach you how to draw it, right? Now, what you do is to first head on to a daily time frame. Now, this daily time frame now, what are you going to be doing? You are going to be marking out your previous day high and your previous day low. And that your previous day high and previous day low is going to act like a support and a resistance, right? Now, if I say previous day high, I'm on a daily time frame. I'm on a daily time frame. If I say previous day high now, I mean the previous candle before today candle that is forming, right? If you're on a time frame, the time frame means the candlestick. If you're on a daily time frame, now it makes one full day candlestick. If you're on a weekly time frame, one full candlestick means a weekly price action. If you're on a 15 minutes, it means one full candle means 15 minutes price action. Now I'm on a daily time frame. And if I say previous day high and previous day low, I'm literally talking about this previous candle before today's candle. This is today's candle forming. Today's candle is still forming. Once today ends now, the next day candle will start forming again, right? So I'll mark out my top and I'll mark out my bottom on the daily on the previous day. So let's go use my horizontal array. Let's mark it out. The top of the candle. That's my previous day high. Remember? Then my previous day low. Now, this is the most used support and resistance. right? This is the most used support and resistance. Now, once you mark it out on a daily time frame, what do you then do? You go over to a 1 hour time frame, right? I'm going to teach you this very simple support and resistance strategy. Then we are going to talk about supply and demand. Now, most trader, they trade based of this support and resistance. Even me, when I was getting started with trading, I trade most of the time with this support and resistance, right? So support and resistance now is now like a widely used trading strategy. And to mark out those support and resistance, what most traders use is the previous day high and the previous day low as their support and their resistance. Now, how do you as a trader trade with this? Right? How do you as a trader trade with this support and resistance? Now you've marked out your previous day high and your previous day low. And with what I said, that's how so many traders mark it out. If traders are not going to mark out support and resistance on a previous day and previous day low, then they are going to do it on a previous week high and on a previous week low. Right? Now, what do you do? How do you trade this? First, once you mark it out, you want to see that the candle or the price goes below that very level. How to trade with it, that's what I'm explaining. Now, you don't know how to mark out your support and resistance. This area now is like a support, which is like the previous day low, right? Then this area at the top is like the resistance, which is like the previous day high. Now, how do you trade this? Normally, the price is supposed to pull down to this previous day low. The price is supposed to pull down to this previous day low and start pushing back up, right? That's ideally how support and resistance traders are waiting for the price. This is what they are waiting for, right? Now, what is the price gonna do? On a normal scenario, that's how the price is supposed to work. The price is supposed to just get to the resistance level or the support level and reverse. But what the price does is this. Once the price gets there, right, the price is going to pull down, go below that very level, and pull back up. Going below that level is just to grab liquidity. For those who have been on this program, you now understand this, right? Going below that very previous day low is just to grab liquidity. Only if the buyers or the sellers are not able to push the market again. Now, in a normal scenario, like I said, the price is supposed to pull to this support level and start going up. But if the price goes down and break below that very support level, right, and then start pulling back up, that break below it. Now let's take a look at this as an example. Let me zoom into the price, and you're gonna see this for yourself. You can see the break. The price usually broke below this very level right here and start pulling back up. Now, this support level was broken. Now, why was this support level broken? To sweep or to grab liquidity in the market, right? Now, how do you as a trader take advantage of this? You as a trader, what you do is literally very, very simple. You will wait for the price to get to this support level. And once the price is here, you don't just take trade yet. You wait for a liquidity grab. Now, a liquidity grab is the price will break that very support level, then pull back up, coming back into this your down previous day high and previous day low. Once it's pulling back up, you then look for an area to get into a long trade. Now, many support and resistance will not hold. Many support and resistance will just get broken and the price will continue going down. Now, you don't just, like I said, you don't just take trade once the price is at that support level yet, or once the price just broke the support level, you wait for a pullback. And that pullback now, here's how you take a trade with this very pullback, right? Once the pullback happen, you want to make sure that the candle, remember what the time frame I'm currently on. I'm on the 1 hour time frame. Many traders are gonna choose to trade it on a 5 minute, 15 minute time frame. Is up to you. But since I'm teaching you guys, I'm doing it on a 1 hour time frame. So if you're gonna do yours, always do it on a 1 hour time frame. Now, if you notice this very chart closely, once the price breaks below that your support level, what do you expect? You expect the price to pull up, right? If that break was a liquidity hunt. Now, once the price pull up, you wait for the second candle close. You wait for the second candle to close. Once the second candle has closed above the resist or the support, start looking for ways to take long. Right? Now listen carefully. This was the break, then a pull up. That's the first candle. Then the second candle went up and closed above the support level. Now you get into a buy at that very get into a buy at that level. Your target now is the previous day high. That's where you are targeting that the price is gonna go. What is the price gonna do? The price is gonna literally pull up to this level, go above it a little to grab liquidity and continue going down, right? Or the price is gonna just go right. Now let's go over. Let's take a look at another example. This is just a simple support and resistance strategy, right? We have not gone to the supply and the liquidity. Just make sure you join the live till the end. So let's check it out on GBP USD. Let's see if this is gonna work on GBP USD. So let's go to GBP USD. Let's take a look at that and also take a trade on the GBP USD. Now, what did I say? Go over to a daily time frame. On that daily time frame, now you mark out your previous day high and your previous day low, right? So we are currently on a GBP on a short trade on GBP. You can see this for yourself. We're currently on a short trade on GBP. So let's take this short trade right here. So what did I say? Mark out your previous day high and your previous day low, which is this previous candle at this level. So let's mark out the high of the candle. So just mute your mic and listen. Just mute your mic and listen. So I guess that's clear. Now, what was I saying? You want to mark out your previous day high and your previous day low. Now, how do you do that? You use your horizontal ray, right? On your tools box, you use your horizontal ray. Here's it right there, right? Now, let's mark out our previous day low. We've just marked out our previous day high at this top right here. Now let's mark out our low. You mark out the weeks. If it's a week, you mark out the week. I believe you know what week are. These tiny lines are called weeks. So if there's a week, you mark out that week, right? So I have my previous day high right here and my previous day low right there. So what is the next step? The next step now is to scale down to a 1 hour time frame. So time frame is also very important as a trader. You need to know the time frame you should be on as a trader. Now, what did I say? These are previous day high at this level. Remember, these are previous day high, then previous day low. What are you gonna do? Right? You are going to wait for the price to sweep the liquidity above that very high. Now, why is the price gonna sweep the liquidity? Why are you expecting the price to sweep the liquidity? It's simple, right? You're expecting the price to sweep the liquidity because it's being traded by so many traders. This support and resistance, previous day high, previous day low, as a support and resistance, is being traded by millions of traders, right? So the price is gonna just go up and hit stop losses of so many traders. Why? Because they know that there is so much liquidity right there. There's so many stop loss at that level. And once the price goes there and hit the stop loss, then the price will start collapsing, right? So once the price goes there and hits the stop loss, then it will now start collapsing. It has finally gone ahead to grab liquidity. And many of you start asking, hey, what's liquidity? Right? Liquidity is simply money, right? Liquidity is simply money in the market. If you hear of liquidity, it means money, right? Now, liquidity in trading is this. Where people place stop loss on is an area of extreme liquidity. If my stop loss is above this resistance level, your stop loss is above this resistance level, other people's stop loss are above this resistance level, right? It means there is liquidity above this level. There's so much money resting there. If the price just goes up and stop me, you, and other millions of traders out of the market, you know what that means? The price or the market has successfully now provided so many liquidity for the market. Believe you guys are following. That's why you don't just trade once the price is back to this resistance level. You wait for a confirmation, which is gonna be the liquidity grab, which is the price going above the resistance or the support. Then once the price pull back down, you want to make sure the candle closes inside your support and resistance, inside your level. Once the candle comes back into that very level, you want to make sure the candle forms and closes inside. Remember, it's the next candle, not the candle that came into that very resistance level. Once the candle comes inside, you want to make sure the next candle that is going to form, it forms and close inside this level. Then you take your short trade directly from there. You take your short trade, stop loss above the previous liquidity grab. Stop loss above this very previous liquidity grab at this level. Then where's your target? Your overall target is the support level, which is the previous day low. Right? Now, let's check out another chart. We've taken 2 trades with this strategy. Let's check out BTC charts. Right? What's the first step? Don't forget it. Your daily time frame. Now, on the daily time frame, now, what did I say you want to see? I want to see that the price goes below that very level. Let's remove all of this. Always remember what I said, right? Always remember what I said. I said, right? So many traders, they do mark out the previous day high and the previous day low as their liquidity and as their support and resistance, right? While so many other traders, they do mark out their previous week high and their previous week low as their support and resistance, right? Now, where's our previous day high? This previous candle at this level, right? So let's mark it out. Let's mark out the previous candle at the top of the candle, then at the bottom of the candle. And remember, what did I say? only if the candle has come down to break that support and resistance level before you take action. And it must come into the area and close with the next candle, right? Now, let's take a look at this. Currently, now we're currently having a previous day low at this level right here. And did the price goes below this previous day low? Literally, no.
Okay,
Just mute your mic and listen.
okay.
So no need to show your video. Just mute your mic and listen.
What on here? Oh no, yeah.
All right. So just listen carefully. Right? Now, what did I say? There are rules to trade with this. Right? There are rules. The first rule, remember, is the price need to go below that very support or resistance level. If the price just go below this, then pull back up, then form another candle, then I'll get into a buy. My target is this next high at that level. Now, did that happen? No. The price did not go below this my support level, so I won't be taking any trade. But if you notice, the price actually just went up. The price went up and came to the previous day high. So let's also check if there will be a trade on this previous day high. Let's see what happened. Now at this level, now you can see that the price came to this previous day high at this level, right? Now the price formed this very candle, pull back up, pull back down. Now at this level now, let's scale down to a 15 minutes time frame. Let me show you this. Remember what I told you, the price can either break that very level and continue going up. And the time frame you should be on a 1 hour time frame. Now let's see what the price is currently doing at this level. Take a look at this. The price has just got to this previous day high, which is gonna be respectfully now this area at this level. This area is gonna be the previous day high. So let's mark out, let's draw it straight to the high. Then let's see. The price usually tap into this previous day high at this level. Now it went above it, then the candle formed. And now, how do you take the trade? You go over, wait for the next candle to form. Since we've marked out the high, let's check out and wait for the next candle to form. This candle has just tapped into the resistance level, then it went down. Then the next candle formed after the candle. You can see the next
Boss,
candle
your
went
voice is
up.
very low. Your voice is low.
All right. Someone said my voice is low. Is that how it is? Other members, is that how it is?
No, 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 no. Your voice is normal.
All right. Someone said my voice is okay.
Yeah. Okay.
All right, Mr. Okay, someone said my voice is okay again. So check again if the voice is okay now. Check if the voice is okay and let me know. Mr. Abubakar, you were the one who said the voice was low. Check now if it's okay.
It's okay, babe. Because it's too low,
All
sha.
right.
But we can manage it. It's too low.
All right. I guess it's a speaker. Other members, is that how it is? Just reply in the chat box. Okay, someone said my voice is okay. Another person said it's okay. So I guess it's your speaker. Just increase your speaker and let's see. Just increase your speaker and see if it's gonna work. Now, what's the rule? Once the price gets to this resistance level, the price need to go above it to sweep liquidity. And once the price has gone above it, what do? You wait for the next candle to form, right? And close inside this your level. Now, once it's done closing, what do? You look for a place to take your shot, right? Just like this. Let's draw it. Now, if you notice, just remember where your stop loss is. Your stop loss above the liquidity graph. And you can see where's your target. You target the next or the previous day low. Now, if you notice, the price usually went up. Now, this happened. Why did this happen? Why didn't the price respect this? Right? Now, if you notice that very time when the price did this, there was a news, right? There was a high impact news, right? The time when the price pushed up like this, there was a news. So it's very, very important you take note of these little fundamentals. Once I teach you how to trade the news, I'm going to teach you how to get the news, right? How to take the news in your, as you use the news in your advantage, right? So it's also very important you know that is there a news that day? Should you expect a news? Is there a high impact news? Right? Now, there was a news today for those who know how to trade the news. There was a news today, right? And if you notice, the price went down a little in profit, then went up and hit the stop loss, right? So this was a loss. Let's take a look at another chart. Let's take a look at another chart, right? I'm trying to make sure you understand this. This is a support and resistance level. On a normal scenario, what people are waiting for is this. People are waiting for the price to get that very level, either the previous day low or the previous day high. People are waiting for the price to get there and they take action. But since you are here, you don't take action yet. You wait for extra confirmation, which is going to be the liquidity grab, right? Now, I'm seeing this clearly at this level. I'm seeing this clearly at this level. This was a daily candle, then this was the next day, right? So let's mark it out. Previous day high and previous day low. These are previous day high. Remember to mark out the wicks rejection, not the body of the candle, but the wick. Now we have our previous day and previous day low. The next step is to head on to a 1 hour time frame, right? You can choose to start using this strategy. Just keep using it, master it, practice it, back test it, and follow the rules, right? Now let's take a look at what this price did at this level. Let's zoom into the price. I don't know why it's... All right, it's currently loading up. All right. Now, if you notice at this level, when I marked it out, this area was my previous day high. Now, what did I say? You wait for the price to go up above that very previous day high just to sweep liquidity. If you notice the wick that went up, right? This very long wick went up. What did that wick went to do? To sweep liquidity, because like I said, support and resistance is the most used strategy in trading. Support and resistance, then trend line. Support and resistance and trend line are the most used strategy. Now, this is how to take it to your own advantage. You wait for a liquidity sweep, right? Now, a sweep above the previous day high now, and this long wick up is a liquidity grab. What do you then do? You wait for the price to pull back into that very level and form the next candle, right? the next candle is gonna confirm your entry. If the next candle did not form inside your level, inside your supply and inside your support and resistance level, then you don't have a trade. In this scenario now, where do you take your trade? You take your trade once this candle close at this level and the second candle starts forming, right? So once you take your short trade now, your target normally is the previous day low. Previous day low. And where's your stop loss? Your stop loss above the high. Now, if you notice, the stop loss is bigger, right? So this is a bad trade. If you are seeing a trade like this, you should not take this type of trade. This is like a 1-to-1 risk to reward ratio, which is a trade I consider as a bad trade. So if you're gonna take a trade, at least 1-to-3 risk to reward ratio. If you are seeing a setup like this, just forget about the trade and look for another setup. Right? Now let me teach you how to trade the supply and demand. Now, there's a difference between a supply and demand and a support and resistance. Many traders are going to tell you it's the same thing, right? Many traders are going to tell you it's the same thing, but there is a difference, right? There's a difference in the price. Now, what's the difference, right? A supply level is an area at the top of the market or at the top of the price, right? Where the price starts rejecting from, or where sellers start selling off on the market. It's gonna be an area at the top of the market where the sellers start selling off at that very area. Now, if the price is going up, it means people are buying. There is buy in the market. And if the price started going down, that means people are now selling and there is more sellers in the market. Right? Now, how do you go about this? You want to mark out your supply and your demand level. And many traders, how do they do this? They go over to the daily time frame and use their support and resistance as a supply and a demand level. But since you guys are here, I use my 1 hour time frame to mark it out. Right? Now remember what I told you to mark out your support and resistance now. Many traders, they're gonna go over mark out their previous day and previous day low. Now I've taught you how to go about it, how to trade it. Does not mean you have to start trading with the support and resistance, right? With what I've taught you, wait for the liquidity sweep, right? Then you take your action. And remember to follow the rules. Now, if you notice this very chart at this level, the price was pulling down. The price was going down. Now, immediately the price got here, the price started going up. Now, at this level, the price was currently ranging at this level, then spike up. Then at this level right here, let's mark out another level. At this level right here, the price was usually going up, then it got here and then sold off. Then you start identifying all basic levels. I'm going to teach you how you can trade this. Let me teach you how to identify your supply and demand first. There was a buying right here, then once the price gets here, there was a sell-off. Right? Now, all of these my highlighted area are areas in the market which we call supply and demand. Right? Now, what exactly is a supply level and what exactly is a demand level? Right? Now, a supply level is an area at the top of the price where sellers started taking charge of the market. Now, at this level, the buyers have been buying, and once the price gets here, when the price got here, sellers started taking charge of the market and it started selling. Now, automatically, where those sellers started selling off automatically becomes a supply level, right? So you mark that very area out as a supply level. But if you go over now, many traders are going to call this supply level a resistance, right? Why are they going to call it a resistance? Because there was a first touch, a pull back down, the second touch, then continuation. So automatically that area becomes a resistance for them. But me, I choose to call it a supply level, right? What I call my resistance is my previous day high and my previous week high. Previous weekly high and my previous day high. That's my resistance level. While my support level is my previous day low and my previous week low. That's my support level, right? Now, many traders are going to mark out areas like this and then call this a resistance. They are also correct, right? But the way I do it, that's what I'm teaching, right? Now I have my, what's it called? Supply level. Don't forget, a supply level, what am I expected to do at that level, right? What am I going to be doing at that level? I'm going to wait for the price to get there. Then I take a sell. I sell off. I short, right? Not all supply level are valid. I'm going to give you confirmation you're going to need to take trade with this supply level, right? Now, I believe you now know how to mark out your supply level. Let's mark out another supply level. So the price was essentially pulling up at this level. And I immediately got to this area right here now. It started pulling down. Now, automatically, we have a supplying level right there. What does that mean? Sellers took control of the market at that level. So I mostly use my rectangle tool. On your tools box, you're going to find rectangle, right? Rectangle. Just select it, then you place it on the chart. Now, how do you mark out your supply or your demand level, right? To mark out your supply and demand level, many traders, they use order block. Me personally, I use order blocks to mark out my supply and demand levels, right? Now, many of you start asking, hey, I don't know what an order block is. Now, if you don't know what an order block is, it means you, right? You have not been active or you are just joining the mentorship program, right? That should be the reason why you don't know what supply and demand level is, or order block. That should be the reason you don't know what an order block is yet. That means you're just joining the mentorship program. Now, for those who have been here, they know what another block is, right? So another block is an area in the market where institutional traders has previously executed their trades, either a buy or a sell order. What does that mean? Now, at this level right here, no, institutional traders are the one that move the market, right? The market don't just get to an area and start moving down. Institutional traders are the one that move the market, right? Now, at this level now, there was some sort of buy, and immediately the price got here, the price started selling, right? So I guess there's news. I don't know, why is this Bitcoin chart moving so fast? I guess there's some fundamentals happening because the Bitcoin price is just moving extremely fast. I'm noticing it. All right. So that's by the way. Now, what did I say another block is? It's an area where those institutional traders has previously executed their buy or sell. Now, at this area now, the price was here, then started rallying up. You can see this huge green candle started forming. Now, it means institutional traders, they started buying at this level. So this level now is an order block. And how do you mark it out? You mark out the last opposite candle. Mark out the last opposite candle as your order block. That's what another block is, for those who still don't know. Why at this level now, the price was here, then boom, institutional traders, they started selling off. So we're currently having an order block right there. Or in other words, we're currently having a supply zone right there. And what did I say you do in a supply zone? In a supply zone, you short. Right? Now let's mark out demand zone. I believe you've gotten the supply aspect. Now let's mark out demand zone. Now in a demand zone, what do? You buy. Right? Now you're gonna notice why I don't call a demand or a supply zone a support and resistance. Right? Notice why I don't call a demand zone a support and resistance. Now, at this level now, support and resistance traders, these are they're gonna trade it. At this level, these are support and resistance traders, they're gonna trade this. They're gonna go over mark out this high. Let's mark it out just like this. If you notice, the price came tap here, pull back down, came tap it, pull back down. Automatically, that becomes a what? A resistance level for all those support and resistance trader. Right? Anytime the price is going to be back there, they want to start shorting. They want to start looking for ways to short. Now, but me, I don't consider support and resistance. If I want to even consider support and resistance, I use the previous week high and the previous week low, or previous day high and previous day low. I believe you guys are following. Now, many traders are going to be waiting for the price to get there again so they can sell. Now, since you are here, what do? You mark out your demand or your supply zone at that level. Right? Now, all those traders, they would have waited, and they finally, when the price got there, the price not even respect it much. The price just respected it a little, and boom, broke out. Now, to trade the supply and demand is this. To mark out your supply zone, you want to see where those institutional traders started selling off. At this level now, the price was here, ranging, then boom. Institutional traders, they sold off. And what did I say? To mark out this your supply zone, you either mark out your order block. You just use your order block to mark it out. And how did I say you mark out your order blocks? You mark out the order blocks on the last opposite candle before the sell off, or the last opposite candle before the buy. Right? So now in a scenario where there are multiple rejections, where there are multiple wicks, if you have been in my class, you must have known this by now. In a scenario where there was a weak rejection, another weak rejection, you mark out the wicks. Why? If there is no rejection, you mark out the last opposite candle. No matter how big the opposite candle is, you mark it out. Right? Now there's multiple rejection at that level. So let's mark out the multiple rejection, which is the wicks. So let's mark it out. Currently now, I have a supply level. So let's draw it straight to my right. Now, what are you expected to do in a supply level? You short in a supply level. And what do? You can easily place a sell limit order. Then where's your target? You target any low, right? Then stop loss just slightly above the supply level. I'm going to give you all the confirmation you're going to need to take a trade real supply strategy, right? We're going to combine liquidity grab and market trend, which is going to take us to trend line. But I'm just trying to make sure you understand how to draw and mark out your supply levels. Are you guys following? All right, now you can see how the price came to this level right here and ran in some crazy profits. You can see this for yourself. The price pulled back to this supply level and started pulling back down beautifully. Right now, I took a trade on GBP today. We also mark out this area as a supply level. Remember what I told you. If there are multiple wicks, you mark out the wicks of that very candle. And there are some extra confirmation before you take a trade with this supply and demand. Right? There are multiple confirmation you're gonna need. Now let's see if the price respected this supply level. Let's see. All right, so the price has not gotten there yet. So automatically now, it means anytime the price is gonna be back there, I am gonna sell. That's a simple meaning. So anytime the price is gonna be back there now, it means I am gonna sell. Then, what's the demand level? Let's mark out demand level before I teach you all the confirmation you're gonna need to take a trade with this. Now, opposite of a supply level is a demand level. An area where the price started buying, right? Or an area where the market structure started shifting. Now, in a scenario, or in this case, you can see that the price was selling off. Let me zoom in. The price was selling off at this level. And immediately got here, it started buying. This area now automatically becomes a demand level. So you can mark it out. And how do you mark it out? If there are multiple rejections, you mark out the wicks. While if there is no rejection, you mark out the last opposite candle. Right? And this now automatically becomes a demand level. And anytime the price is going to be back there, you want to long. That's what you do in a demand level. Right? Now, let's see if we have any other demand level. We're currently seeing some sort of consolidation right here, then a spike up. Now, immediately that happened, what do? You want to mark out that demand level. And how do you mark it out? Your order block. Either the last opposite candle or the wicks of the candle. If you notice, there is wick right here. There are so many wicks at this level, right? So I want to mark out this wick at this level right there. So let's mark out the wicks. So we're currently having a strong demand level. Now, why is this a demand level? Right? Why is this a demand level? This is a demand level because the price was here, consolidated, then spike up. Now, on a normal scenario, a demand level is when the price will pull back down and then push up. That level is a demand level, right? But in my case, or in this case now, what did I say demand? What did I mark out as my demand level? I saw a consolidation, then a push up, then I still mark out that level as a demand level. Now we have different types of this supply and demand, right? This area now was a ranging market, right? So ranging market does not mean once a push up happen, that area is not a demand level. Even if the market is ranging and once a push up happen, that means buyers are actively there to buy at that price. That's why the pushed up happened. I guess following. It means buyers are there waiting to buy at that very price. Remember the first push up happened. And that push up now confirmed it that area is a strong demanding level. So anytime the price is going to be back, they want to long. Now, the price has already gotten here and ran some crazy profits. You can see this for yourself. Now, what am I expecting again? If you notice, when the price got here, and rallied up again. Now, what am I gonna do? I'm going to mark out my demand level at that level. So what did I say? To mark out the demand level, use your order block, either the last opposite candle or the wicks of the candle if there are multiple rejections. So I have now a demand level, right? So I now have now a demand level. Now, what is going to make demand level valid? What is going to make a demand level valid? So let me know. Are you guys following everything I'm saying? Are you guys following everything I'm teaching? All right, someone said it's the network. All right, it's okay. Let me know in the comments in the chat box. Are you guys following everything I'm teaching? Drop it in the chat box so we'll continue. All right, so I'm not seeing so many replies. So some people, they are just joining, right? I notice some of you are just joining. So if you're just joining, you are so welcome, right? The live class is being recorded. Once I'm done, I'm going to send the recorded section to the group so you can easily see what you missed. Right? Now, what are the confirmation you are going to need? I believe if someone takes you to the chart now and say, mark out a supply level, mark out a demand level on the chart, I believe you can now do that. Right? So I took a trade on GBP USD. I took a trade on GBP USD today, and I sent the signal straight to the group by this time yesterday. By this time yesterday, I sent the signal straight to the group. And with what I taught earlier in the live, with the support and resistance strategy I taught you, I believe you know, or you can now take a trade like this. I believe you can now take similar trades like this. This is a very perfect trade, and I taught you how to trade it earlier in this live. Now let's use supply and demand strategy to trade this. Let's mark out. That was what I used. I used the supply and demand strategy to take this very trade. Now, what did I say? You want to go over, see a point where the price got to and rejected. I'm going to teach you the confirmation you're going to need to take a trade with this. Right? You don't just take random trade with this supply and demand. You're going to lose your money. If you don't get this confirmation I'm about to teach you, you should not be taking that trade. Right? Now, what am I seeing here? I'm seeing that the price was scaling up, scaling up, scaling up, scaling up, and immediately got here, boom, started collapsing. Now, many seeing that now, it means sellers got into the market at that level. And when sellers get to the market at a level, what did I call that very level? Let me see if you guys are following. When sellers get into the market at a level, what do I call that level? What did I call the level? Reply in the chat box. Let me see if you guys are actually following. Supply zone, liquidity level. All right. Any other answer? Let me see. All right. Any other level or any other answer? So we'll continue. All right. Supply level, liquidity level. Now, listen carefully. Right? you said the supply level, you are correct, right? When the price push up to a level and start selling off at that very level, automatically that level is a supplying level, right? So you are correct. So you saying is a liquidity level, you are somehow wrong. Are you following? If you would have called it a support or a resistance level, I would have said you were partially correct, but it's not a liquidity level. You can either call it a resistance, a supply, or an order block, a bearish order block, right? And where do you mark out as your supply level? You mark out the weak. If they are weak rejection, you mark out the weak. So I want to mark out the weak at this level, just like this. So I have my weak at that level. Now, what am I going to do? Anytime the price is going to be back there, I want to short. So this is supply level. And beautifully, I set a signal yesterday, right? And I was going to short at this level. Stop loss just, let's say stop loss about 30 pips, just above the supply level, about 31.4 pips stop loss. I believe you know how to calculate your stop loss. This area where I'm highlighting, just notice where I'm highlighting. Let me highlight the level so you can see. This area where I'm highlighting, right, is called the pips. This area is the pips level on the chart. So you can easily know. Knowing the pips is also very, very, very important. So this is about 31 pips stop loss. Since I'm risking 31 pips stop loss now, where's my target? My target should be at least 60 pips. Now I'm targeting 80 pips. So this is like a 1 to 2.4 risk to reward ratio. Perfect. I took this trade with the supply and demand strategy. Right? Now, what are all the confirmation you are going to need to take a trade with the supply and the demand? Now, my confirmation I use is simple. It's simply liquidity or trendline liquidity confirmation. Right? It's simply the trendline liquidity. Right? Now, I believe you guys are with me. Just make sure you're getting it. Right? Now, what is actually the trendline liquidity? Now, trendline liquidity is just your main trend line. It's just your normal trend line, which I believe you all know how to draw it. Just your normal trend line is what I call trendline liquidity. Right? Now, I want to take a look at the chart. If I take a look at this very chart now, what am I saying? I'm saying that the market is bullish. These are the confirmation I use to take a trade with this supply and demand. Now, I see that the trade was bullish. I guess you're saying that. So in a bullish market, where do I do what, or how do I draw my trend line? I draw my trend line at the bottom of the price. At the bottom of the price, if the price is bullish, right? Just try and watch the video lessons. I have video lessons on my Discord. Just try and watch the video lesson. And if you watch those video lessons, this should not be what I should be telling you again. By now, you should be asking me questions on them. Right? You should be asking me questions on them. Why enlightening you more on it? You just keep dropping questions and I'm answering your question, teaching you, explaining more. That's the main reason for the live class. Right? There are video lessons there. On your free chance, watch those video lessons on my Discord. Now, what did I say? I want to draw my trend line. Since I know that the market is bullish, remember what I do? I draw my trend line and I have at least 2 touches. 2 touches, then I know my trend line is valid. I draw my trend line at the wick, sometimes at the body, just to make sure I get all my touches I need. Now I have my first touch, my second touch, my third touch, then that was how the price has been bullish. Now, automatically, once I have this trend line, I don't trade trend line. For those who have been following me for some time now, for those who have been following me for some months now, some weeks now, you're gonna know that I don't trade trend line. You will never see a trend line like this on my chart, or even if you're gonna see it, I'm gonna mark it out as a liquidity. You will not see me taking a trade with it. So now, once I mark out this trend line, I call this a trend line liquidity. This is called a trend line liquidity. Now, how is this a trend line liquidity? On a normal scenario, this is how the price is gonna work. The price is supposed to tap the trend line, move up, tap it, move up, tap it, move up, tap it, move up. Then continue tapping it and moving up. Right? Now, like I told you earlier in the live, trend line is the most used strategy in trading. Trend line and support and resistance. When I got started, I used trend line and support and resistance. If I go over, start showing you my chart when I got started, you're gonna see trend lines, support and resistance. I don't know about supply and demand. I don't know liquidities. I haven't understand the concept of liquidity in the market. I don't know how to trade like the smart money, right? Because I was just a complete beginner. So it's very, very important you understand this. Now, trend line is the most used strategy in trading. It means anytime the price is going to be back to this trend, people want to long. And people want to long, what does that mean? There is now so much liquidity in the market. And what is the price going to do? The price is going to literally go below that trend line to grab all the liquidity resting below the trend line. Since it's a bullish trend line, the price will likely collapse to grab all the liquidity before pushing back up. Now, on the price action strategy, this is my favorite strategy. This combining this trend line liquidity with my what's it called? Supply and demand. Make sure you don't forget it. Now I have my trend line liquidity right there. I have my trend line, but me, I call it trend line liquidity. Now, what is next? I want to mark out my supply level. Now, let's mark out a supply level. Now, I have a trend line. I have a supply level. What then am I going to do? I know I have my liquidity resting below this trend line. Then the price has just gotten to my supply level, and there is a high chances that the price is going to start selling down. What am I going to do? I'm going to either just set a sell limit order at this level. I'm going to just set a sell limit order at this my supply level, or I'm going to just wait for the price to break the trend line. Remember, this trend line and this supply level, they are now together. I'm going to just wait for the price to break it, and immediately the price breaks it, I'm going to just take my shot and then look for another demand level to target. Right? So this is the first way. This is the first confirmation to trade with this supply and demand. So if you don't see this, if the price is just, let me show you a wrong example. Let me see if I'm going to find a wrong example so I can easily show you. Okay, let's take a look at this other example before I teach you the wrong trend line liquidity. Now take a look at this. Take a look at this right here. The price is currently moving right like this, which is currently forming a trend line. So what did I say? You draw your trend line below the price. Just in a way that those trend line traders are going to draw it. So they're going to draw a trend line. And what did I say is the next thing? Your supplying level. You mark it out. When looking at this chart now, you're going to see The price pulled up at this level, rejected. Pull up at this level, rejected. We have two supplying levels right at this level. Now, what are you going to do? You're going to mark out the two supplying levels, right? You mark out both the levels. So let's mark out both the levels. Let's mark out the first supplying level. Remember what I told you on how to mark it out? If there are multiple rejections, you mark out those multiple rejections, those weak high as your supplying level. Right? What's the next thing? I want to mark out my second supplying level at this area right here. Now take a look at this very chart right here. Take a look at what the price did. Clearly, I know what the price is gonna do, right? If you actually understand everything I'm teaching, clearly you know what the price is gonna do by now. You know the price is gonna from this trend line gets to a supply level, either this one or the second one, then start collapsing. That's what you feel or you know that the price is gonna do. Now, once you draw your trend line, you mark out your supply zone. Once the price is back to that your trend line or your supply zone, you can set a sell limit order or you enter at market price. Then stop loss on this very type of trade, you don't risk more. Just set stop loss just slightly above the supply level. Only if you don't know how to mark out your supply level. If you notice on my trade, I get sniper entries. Right? Hardly before you see my trade running in massive profit before running a massive loss before coming back in profit. So I always get sniper entries. Now, I want to mark out my supply level and stop loss above this level. Where's my target? I want to target any demand level. And where's the demand level? Pull back, pull up. Demand level. Right there. So that's my target. Now, this first supply level, they did play it out. You can see immediately the price tapped into this level. Immediately the price tapped into this level, the price started rejecting down. Now, it got to this level right here and started spiking up again. Now, once it started spiking up now, you would have been stopped out or you would have been stopped out at break even. Why did this trade reversed? Right? The trade reversed because this supply level was not able to push the price down. This is supply level. And what do you do in a supply level? Not a short. Now, if that supply level don't have enough liquidity to push the price down, it won't be able to push it. Are you guys following? So for the price to move now, you know it needs liquidity. So if it doesn't have enough liquidity, it won't be able to push it down. Right? So I want to mark out, or since the price has just stopped me out at break even, remember I have two supply zones. So let's check out the second one. So I set my sell limit order, stop loss just slightly above the supply zone. This is like a 20 pips stop loss. 20 pips stop loss now. You can't just go over and start risking 10 pips or 14 pips to make how many pips? Where's your target? Remember your target is at this demand level right here. Your target now is about 115 pips. Now you're risking 14 or 15 pips. It's not ideal. So it's advisable since you are going to be making about 115 pips, your stop loss should be at least 20 pips. With a 20 pips stop loss now, you can easily see how this trade played out. Now, remember what I said. Once the price is at that very level, once the price is at that very level, what are you expecting? You're expecting the price to pull back down and start collapsing. On a normal case, traders are going to just wait. Once the price tap into that supply level, they're going to wait for the price to pull back down and break the trend line. But me, I just love trading directly from that supply level. Once the price is there, I just like shorting at that level. right? So let's go to another chart. Let's see if this strategy works on another chart. Let's go to gold USD. Once I'm done teaching you this, now I'm going to teach you how to take your short trade with this, or sorry, your long trade with this. Then once I'm done with that, I'm going to teach you different liquidity hunts, some key liquidity hunts in the market. Now, many looking at this, I just, we're on a 1 hour time frame. 1 hour time frame is like my favorite time frame. If you have been following me, you're gonna notice me. You're gonna notice it. I always mention time frame. 1 hour, 1 hour, 1 hour. So 1 hour time frame now is like my favorite time frame. So as I'm teaching, if you have any questions, just always drop it in the chat box. And as I get your question, I'm gonna reply you. I'm gonna answer it as I'm teaching. Now, many looking at this now. Do I have a supply zone at this level? Do I have a supply zone? Reply in the chat box. Let me know if you guys are actually with me. Do I have a supply zone at that level? Yes, the live class is being recorded. Yes, the live class is being recorded. All right, someone said yes. Other members reply. Yes, there is a supply zone, okay? Because there is an order block, all right? All right, so let me see. Let me see if you guys are actually correct, because I don't know if there's a supply zone. Let me see. All right, so there is a supply zone. What did I say supply zone is? Where the price pull up to, and immediately got to that area, there was a displacement. The price started selling back off, right? And remember, if you're gonna trade this supply zone now, let's say you want, let's say the price has not started selling off yet, and you want to take this short. Let's say you want to enter for this short at this level. What are you gonna do? First thing is to draw your trend line. So let's draw out my trend line. Can you see my trend line? Very beautiful. The trend line must have at least 2 touches to make it valid. Now I have my trend line. What did I call that trend line? Is it a trend line, or what's the name I'm gonna give to the trend line? How many of you know that? Let me know if you guys are active. How many of you know the name I'm gonna give to the trend line? I'm about to type in something and then name the trend line that very name. How many of you know the name? All right, just drop it to the chat box. Let me know if the name I'm gonna give to that trend line. How many of you know the name? Liquidity trend line. Very correct. So it means you are writing down, or you know it, you are now understanding it, right? It's simply the liquidity trend line. I'm not gonna be trading that trend line, but in a normal scenario, so many traders, they're gonna trade it. We have millions, even trillions of traders in the market, right? Only the forex market transacts over $7 trillion weekly. So we have so many traders, we have so many liquidities in the market. So clearly now, that's my trend line liquidity. Boom, nothing more. Right? Now what is gonna make me then take this trade? It need to be, or if you go over, let's take a look at this. Take a look at this. The price was making this trend line from this level, touch, then pull up. then the price tap it again. If you go over and start shorting at this level now, you are gonna be stopped out with this week. You're gonna hit stop loss. Then what is gonna make you take a trade with this? You're gonna make sure it's in a supplying level. If the price is forming this trend line liquidity and get to a supply level, and then you short, that's how to trade it. Right? So let's mark out a supplying level. Remember, we are currently seeing some sort of rejection right here. The price pulled up at this area and rejected and sold off. So we're currently seeing a supplying level right there. Now, if you notice, the price also rejected this level and sold off. Notice this level at this bottom. The price got here and sold off. But when the price came back up to that level, the price did not respect it. When the price followed this trend line and got to that same level, the price did not respect it. The price just kept on going up. Why? How many of you know why the price did not respect that very level? This is a supplying level. How many of you agree with me on that? Just let me know if you agree with me on that. This is a supplying level. Right? Then the price got there. The price got to that level. Instead of the price selling off, the price just went up and took it out. Why? Is there any sharp answer? All right, break of structure. Let me see. BOS. Okay. Any other sharp answer? Let me see. All right. Break of structure. All right, let me see if I get you. Now you are saying that the price, okay, the price has a break of structure at this level. Let me wait for it to load up. It's loading. Okay. The price has a break of structure. If that's what you're saying, the price has a break of structure at this level. Now the price did not respect this very supply level. Here is the reason. The price has no trend line liquidity. Are you saying it? The price just literally got here, spike up. The price did not respect any trend line. If you start drawing your trend line, let me draw my trend line so you can just see it. Let's draw my trend line before the price got to this supply level. Right? Now let's draw
What's going on? I think his phone went off because I noticed his battery was flat or something.
Let me know if you guys can hear me. It was the net. Let me know. Can you guys hear me now?
Yes, we can.
So sorry for the disturb. It was the network.
All right, no problem.
All right. So let's continue from where we stopped. So let me share my screen. Let me see. So I believe you guys can see my screen now. Now, what did I say? Why didn't this supply level hold? Because there was a supply level. Clearly, there was a supply level right there because the price rejected that level 2 times. Right? Why didn't this supply level hold? It did not hold because there is no trend line liquidity. Can you see this for yourself? So anything I'm teaching, always make sure you are getting it, right? Because there is no trend line liquidity before the supply level. If you notice, the main trend line now was this very one. Clearly now this one was heading to a supply level. This is the main trend line. So there was no trend line liquidity attached to this very supply. If you're gonna draw a trend line, you're gonna just draw a trend line like this because you need to have at least 2 touches before you say this is a trend line. If you don't have 2 touches, you don't have a trend line, right? So now this supply level is invalid because there is no trend line liquidity. So can you see why you are gonna still lose trade if you don't master this? Then where's the next supply level? There was multiple rejection right here. Get here rejected, get here rejected. So there's rejections. Let's mark that area out as a supply level. And how do I mark it out? I mark it out with my order block. Right? Just like this. Did the price respect that level? We've taken about how many trades with this strategy now? We've taken over 3 trades with this strategy. Now, beautifully, what do I see or what am I expecting? The price to get here, then break the trend line to grab all the liquidity below the trend line. The price is going to do that to sweep the liquidity below the trend line. That's why the price is going to do that. And where's my target? We have a low at this level. This is like a low. Target 1. Target 2, we have another low. Target 2. Target 3, we have another last low. Target 3. So once the price is here, I take my first take profit. Second take profit, then full take profit. That's if the price gets there. Right? So let's take a look at how the price or what the price did. I can just go over set a limit order at this level since the trend line is heading there. Then what am I gonna do? My target any of the first targets, then my stop loss above that very level, right? Now you can see it, how it played out right here. Very simple and easy and straightforward, right? Make sure you get the confirmation before you take a trade with this, right? So let's take a look at this recent move, right? On this recent move now on gold, let's take a long, right? So let's take a long. Let's take a long trade. Now, to take this very long trade is going to be very, very simple, right? It's the opposite of taking the short trade, right? But in this case now, you want to trade in a demand level. You want to trade in a demand zone, right? Now, the recent price of gold now has been bearish, right? This is a recent price, and we have been seeing some downtrend at this level. So clearly now this market has been in a downtrend. And what am I expecting? This is like a trend line, right? Forming at this top right here. Now, what am I going to call this trend line? Is a trend line liquidity. Then what am I going to do? I'm going to look for a demand zone that is going to meet with this trend line. So let's draw our demand zone. We are currently seeing a demand zone at this level. We are currently seeing this demand zone right here. Why is this a demand zone? Because the price initially rejected a little, then pull back up. So automatically that area is a demand zone. Or you can call it an order block, right? So I've recorded a video on order block, breaker block, and point of interest, right? I'm going to be dropping the video very soon for you guys, right? Also, there are videos on my Discord. Always watch them, right? I have my first demand zone right there. So where's the second demand zone? I'm currently seeing this red candle at this level. So I'm also going to mark it out. That area cannot be a demand zone, but at least is a point of interest, right? This is not a demand zone, but it's a point of interest, this area. So let's also mark it out. Remember, my overall target now is a level that is going to be in respect to this my trend line. So let's see. This is my trend line. Now, within these two now, what am I expecting with the price? I am expecting the price to get to either this one, then once it gets here, it's going to go up and break above the trend line. Now, I want to make sure that it's as close as this. My trend line is at this level, then the demand zone is at this level, so that once the price just get to my demand zone, the next thing is to break the trend line. Then it's going to be extremely close. Here's what I mean. The price has just gotten to this demand level, but the trend line is at that level. It's still far off. So I won't be taking that trade. Why? Because the trend line is not close. It's not close, and the price has already gotten here. So I want to make sure that the price gets here and the trend line is close to that level. So that once the price gets here, it will just pull back up, and then the next step is to break the trend line, right? So I want to make sure that the price is close. So let's take a look at price, the previous data on any pair. So let's go to another crypto pair. So you can see I'm doing my analysis on the forex pair, doing it on a crypto pair. So it works on all markets. So take a look at this. Take a look at the first strategy I taught you guys, which is the supply and demand strategy, combining into the trend line as a liquidity. Let's remove this. Now we have our normal supply zone at this level. Supply zone right there. Right there, right? Then let's zoom to our right. We have our trendline liquidity. What did I say? The price needs to go tap into this supply zone, and the trend line need to be close to that very supply zone. So once the price tap into it, the next thing is for the price to just break below the trend line. So anytime the price is going to be back there now, I'm going to start taking up my trades. But if you notice, when the price got here, the trend line was still far off. So I don't think I'm going to take the trade yet. Only when it's not close, getting there, then my trend line is close, then I cannot take my short trade. Right? So I believe you guys got it. So just make sure you get everything I'm teaching. So let's just take a look at taking a short trade. All right, so this is another form of liquidity. This is another form of trendline liquidity, if you notice this. Right, if you notice what I drew right here, this is like a trend line going down, and the price literally went up and sweep the trend line liquidity and gets to the supply level. Right, now that's not our main focus. We are looking for a way to take a long. We have been taking short since. So let's look for a way to take long. So I'm looking for a way on the market to take my long trade. All right, so I'm currently seeing some buyers right here. I'm currently seeing some daily buyers at this level. So let's take a trade on this. Let's take a trade with this. Now at this level, the price has been bearish, right? Going down. Now, what did I say? You want to draw a trend line at the top. If the price is going down, you draw a trend line at the top of the price. So let's draw it right there. At least 3 touches. That's what is going to make my trend line valid. Let's scale down to it. All right. All right, so I have my trend line liquidity at this level. Then what did I say next? Now does that marking out your demand zones? Because you're going to be taking a trade. So you want to start marking out your demand zones. So this is a demand zone. Then do we have any other demand zone? This area now is also a trend line. If you notice this, we're currently seeing another trend line at this level. So you can easily see how this trend line keep acting as liquidity in the market, because so many traders, once they get into the trade, once the year of trading, the first thing they learn is supply and demand, the support and resistance, or the trend line. So once they know that strategy, they will go over and start using that strategy all the time. That strategy they will not be using only until they keep losing money till they go over and start learning more advanced strategies. Right? You can see the price got here, pulled up, got here, respected the trend line, pulled up, respected the trend line, pull up, boom. Right? So you now, since you now know advanced topics, you're patiently waiting. You're patiently waiting for the price to break the trend line. Automatically, that's the trend line liquidity. And once the price breaks the trend line, where's your target? Demand level. So you can even use this as a strategy to take a trade. When the price breaks the trend line, you just set your sell limit order at that level, stop loss just slightly above this level, take profit at this level. It's like a 1 to 2 weeks reward ratio. Also, plenty making good profits. Right? If you want me to go over, I'll start showing you so many examples with that very strategies. Now let's take a long trade. We've just drawn out this trend line liquidity at this level. Then what is the next thing I said? I said the trend line liquidity needs to meet with the demand or the supplying level. Now, if you notice this clearly, you're gonna see that when the price was in that very demanding level, the trend line liquidity was closed. Now, what are you expecting? You're expecting a break of this trend line, then you consider that as your trend line liquidity. So you can now beautifully set a buy limit order right here, knowing that the trend line has liquidity. If the trend line does not then hit your stop loss, just to provide liquidity for the market, right? So where's my target? Target any high, stop loss just slightly below the demand zone, beautifully, right? So as you see how it's beautifully played out. So let's see if we are gonna get another chart. Just take a look at this and then understand what I'm saying. We are currently seeing some sort of trend line at this level. I believe you all agree with me on that. So this one now is called a trend line liquidity, right? To traders, this is called trend line. This is their trend line. But to me and to you guys, this trend line liquidity. And to trade that, mark out your order block. Because you now have a trend line liquidity, what are you expecting? You're expecting the price to break out and sweep all the liquidity above the trend line. And once it's done sweeping it, you're gonna see that the next place it's gonna get to is your supply zone. And what do you want to do? You want to short beautifully right there. So let's go to another pair. Then we'll talk about taking long. Let's talk about taking longs. Do you guys now get how to take your short trade with this? Did you guys now get how to take your short trade with this? Let's talk about how to take your long trade. Then you ask your questions, right? Once I'm done teaching you how to take the short trade, now you ask your questions. The long trade. Let's wait for the network to load up so we can easily draw out our areas. All right, currently we are seeing a trend line right here. Now, automatically, when I'm seeing this trend line now, what am I expecting? So I'm gonna be taking this trade live. So this is like a live analysis, right? So now I'm having my trend line. What's my next step? Marking out my key supplying levels. Now I'm currently having a supplying level at this area right here. And did that supply level meet my trend line? Very well, right? Is along with my trend line. So what am I expecting? I'm expecting the price to form any price action right here. Form the price action, gets to my supply level, then I take my short. This is what I'm literally expecting with this pair. But like I said, we're going to be taking a long trade right now. Now, to take this very long trade, I'm not seeing a clear long setup because the market has been bearish, right? If you notice, all the charts I've been checking out since, the market has been bearish. So that's why I'm not seeing long trades. But I've seen a long trade. Let's take this. Now, at this level now, you're going to see that the price now has been bearish at this very level right here. Now, automatically, once the price has been bearish, what do you want to do? You want to start marking out your strong demanding levels. So I'm currently having a demanding level at this area right here. Now, what am I expecting? I'm expecting the price to go up. Once the price gets to my demand level, I'm expecting the price to go up and then clear out the trend line liquidity. Now, did that happen? The price already got to this my demand level, and the trend line was already here. So the price got to this my demand level, then went up to clear out the trend line liquidity. So I'll just go over set a buy limit order, target any structural high, stop loss below the level, 1 to 2 risk to reward ratio played out already. Right? So that's simply how you can trade with this, combining this trend line and your supply and demand. This is simply how to do it. Now, there's also another way to do it. There's also another way to do it, right? If you have been in my class, let me teach you this way. I taught this way straight to my students in my class, right? Now, take a look at this very chart. You're going to see that this very market has been bullish. If I say bullish, I mean the market has been going up. So I believe you all agree with me on this. Now, as the market is going up, once you draw your trend line like this, what do you want to start doing? You want to start drawing out your demand zones along with the trend line. If you have been in my class while I was teaching this, indicate in the chat box right now. Now, once you mark out this very trend line, what do you want to do? You want to start marking out your demand zones on this trend line. This is a demand zone right here, right? This is another demand zone right here. I believe you now know how to mark out your demand zones. I should not be explaining that over and over again. So there's another demand zone right here. Right? So there's another demand zone right here. Now, what are you expecting with this price? This is a trend line going up. Now, why did you mark out this demand zone? Remember this, that as this trend line is going up, what you should be doing is to look for a way to short this trend line. So it's a trend line liquidity. But I'm marking out demand zones. It means I'm looking for ways to long. Why? Why am I doing that? Because as the price is going up, the price has not yet gotten to a supplying level. Only the price has gone to a supply level. Remember, that's when you short. Since the price is currently building momentum, going up, the price has the momentum to just push back down to this demand level, push up, pull back down, push up, pull back down, push up. That's why I drew this, because it's gonna be like a continuation of the trend. But if you notice, the demand level were not filled, so you just remove them, right? So the price keeps respecting the trend line and never filled the demand level. So let's take another example. So if you were in that class when I taught that very strategy, indicate. Let me know if they are here. Very well. Okay, all these trend lines you are drawing now, and the demand zones, you are literally drawing them on 1 hour time frame. Yes, you are correct. Right? So I'm drawing them on a 1 hour time frame. Now someone is saying, does that mean we can also take a long trade to the next supply level? Yes, you can take it. If you are taking a trade from a demand level, you can target a supply level at the top. So I guess that's clear. If you're taking a trade at a demand level, and you can target a supply level at the top. So I guess that's clear. So any other question? So just drop it in the chat box if you have any other questions. So we'll end the live. So I'm going to be dropping a video. I'm going to be sending a video to you guys. Right? I'm going to be sending a video to you guys on this very strategy. on this simple price action strategy. And also how to trade your breaker block, order block, and point of interest. So do you guys have any question with, right? Any question based on what we've discussed? So you can unmute yourself, just unmute your mic and ask. Just unmute yourself and ask the question.
All right. I want to ask a question. Can you hear me, please? Hello? Hello? Hello?
I don't think he's active again. I think he left.
Yeah, probably it's either a battery problem or what.
I don't know. But I think he left. It is it's literally showing this thing, 2 participants.
Okay.
Yeah.
Okay.
I suggested maybe you should wait for him or what.
Yes, we need to do that. But I have a question. I think I like this strategy. This strategy is now this simple strategy. I think just like I just hope I'm able to trade this one. Practice this strategy. I think I like this strategy. Sometimes when you see some of this market, it's like there's no prospect of taking any trade. But with this one now, you can just and just manage.
Yeah, he's back. He can ask your question now. He's back.
All right, boss. Hello?
Okay, I'm hearing you. I'm hearing you.
Okay. Yes, like my question is that now with this strategy, can we use this strategy to trade or any kind of any of the currency pair, including gold, indices, and stock, and even the crypto?
Very well. Yes, you can use it.
Okay.
All right. So I recorded the live. I'm gonna send it so you can always practice it.
Yes, please.
All
So
right.
no point. You just go down to the 1 hour time frame. You don't need to scale down to after the 1 hour. What about if you want to trade now? You want to take the trade now. Will you still take the trade in with that 1 hour time frame? Or you can scale down to maybe 5 minutes.
You can take the trade on the 1 hour time frame. You can also, if you decide to scale down the lower time frame, like the 5 minutes, then get all your confirmations. You're gonna be okay.
What confirmations?
Your trend line liquidity and the supply or demand zone.
Okay.
Is it clear?
Yeah. Okay.
All right.
Yeah. So
another question.
But it is expected you draw your trend line liquidity and your demand zone in the 1 hour time frame. Then when you want to execute your trade, you go down to 5 minutes. I actually like the 5 minutes.
All right. You can also draw the trend line and the demand zone on the 5 minutes. Just
Is it
get the
possible?
trend line liquidity
Yeah.
and get your
Ah.
supply zone.
Is it possible?
Very well.
Oh, okay. All right. That's beautiful. All right. Okay. All right. That's okay. Thank you. Please
All
just
right.
drop the video. Let me go through it now.
All right. So
All
any
right.
other question?
No, for me, I'm okay.
All right. So I'll see you all in my next live section. Right, just go over practice it. Once I drop the video, you watch it. Right. So I'll see you all in the next live class.